As for the rates, of course, at some point, we will start to bring them down. There's lots of uncertainty. There are lots of kind of still cautiousness around, but I think we are at the peak. And being dovish or hawkish, I think the economy just changes. So we've seen that this inflationary process has continued by and large along with our forecast. Okay, and I think we can be confident that the worst is behind us. But of course, there are still lots of risks around. So we have to remain our cautiousness, and then of course move from meeting to meeting, data dependent, and all that stuff. But in terms of the rates, I think we are at the peak, and the path is down.
June has been teed up as the first port of call for a rate cut. Is June in the bag? Is June very likely?
Well, we still have 2 inflation readings to see. Okay, so it's not guaranteed. But I think the probability is quite high. We've seen quite strong disinflation process. We are by and large along our forecast. And barring any major surprises, though there could be some, okay, so retain some cautiousness, I think June is perhaps quite a high probability that we will start the easing cycle. But, of course, one has to realize that we are quite deep into restrictive territory. And that means that even with cuts starting gradually being implemented, we still remain in restrictive territory. So it's still a long path to get to the neutral rates.
Well, let's just talk about that, because we are seeing in some areas of Europe that growth is fragile, and particularly even in Germany, for instance. When you start cutting rates, how long does that take to have consequences for the economy? How long does it take for the pass-through?
Well, it's likely to be asymmetric. Of course, when the rates go up, then you push the restriction. When you start them easing up, the market has to absorb it in a way, saying, okay, we are going to issue more loans, for instance, through the credit channel. It's going to take some time. That's why I think we are, of course, data dependent. We see what the economy says, how does the unemployment develop, how does the economy itself develops, and then of course we see how does it affect inflation. But one has to be very cautious in view that our mandate is very different from the one in the US. Our mandate is price stability. It's not a dual mandate.
The price stability across Europe is different.
Yeah.
We're seeing very different levels of inflation, also very different growth rates. How difficult is that going to be for the ECB? Are you concerned that policy will not be right for some member countries?
Well, monetary policy is not the only policy. Okay? So one should not think that by changing monetary policy you would kind of effectively drive all the policies of the monetary union. So other policies are extremely important, such as structural policies, single market, and all these other related issues, productivity at the end of the day. So monetary policy is not the only game in town here. But I would say that the work has gotten somewhat easier. If you take a look at the dispersion of the inflation rates, it has narrowed down. A year ago, in Latvia, inflation rates were about 20%. Okay, in other countries, it was mid-single digits. Okay, now it has been kind of compressed much more, and we are in a more similar situation in terms of inflation rates than we were in the past.
In light of those comments, you were quoted earlier this month as being comfortable with investor bets on 3 rate cuts by the central bank. Are you still comfortable with 3 rate cuts? Would you even consider 4 for this year?
Well, I would not rush that quickly. My comment was in a way that, okay, the market pricing was very much in line with our macro outlook at the time. If the macro outlook will change, then of course the monetary policy response will change. Currently, it's still difficult to say. We'll see. The interesting developments, of course, are in the US. Okay? How does this affect the overall understanding of price stickiness? We also see in Europe that services are still having inflation in the range of 4%. Of course, they don't need to be pushed down to 2 because the goods prices are having lower inflation. But still, we are not about to declare, at least in my view, any victory over inflation. What we are seeing at the current moment is that we can ease the restriction, okay, so that this disinflationary process can proceed further. As for growth that you also hinted at, of course, the economy has been relatively subdued over the recent quarters. But there, of course, are also some positive signs. We see some PMIs improving, but this is still early stages, so caution to be retained.